Central banks in developing economies should buy more gold to bolster their reserves. Since the G7 seized assets from the Russian central bank in 2022, there has been a discernible change in the favored non-dollar reserves. The intriguing anecdotal evidence that jewelry demand has been on the upswing again in the previous few weeks is worth considering. For what amount of time can gold continue to shatter records of all kinds? In recent days, the price of the precious metal has surged past $4,000 per ounce, marking its greatest jump since the late 1970s. Michael Shui, an analyst at Deutsche Bank, is giving us his thoughts on the precious metal's spectacular climb while we're in Singapore. Michael, your being here today is really appreciated. Do you have any clue as to why gold continues to be purchased by so many people? The idea that emerging market central banks should buy more gold to bolster their reserves is thus one of them. Fewer efforts to build up US dollar reserves have been made since the G7 seized assets from the Russian central bank in 2022. Plus, instead of selling the small amounts they had, ETF investors are now purchasing gold in larger quantities, which is different from the prior 4 years. No such thing has transpired in the past 5 years. Got it. You have also hinted at the possibility that this surge is about to peak in the past several days. For what reason is that forecast being made? Do you think we've reached the price peaks yet? How can they get to this point if they haven't already succeeded to this degree? Claiming that gold has peaked is different from looking at a technical indication of trendiness and debating momentum. Thus, trend-following methods attempt to take into account the relative strength of trends in respect to volatility. In contrast to comparable patterns seen over the past 3 years, this one appears to be maturing, as we also noticed. When a trend develops further, it's not uncommon to see additional ups and downs, with more volatility, in addition to the upward trend. While this doesn't necessarily indicate that the trend is dead, it does diminish the profitability of tracking the trend for systematic approaches. Take the months of June through August as an example of what could happen as the massive trendiness fades. Regarding that, the price of gold did not fall dramatically this year. It did not move very much at all. Got it. By the way, whose money is being spent on the gold? Would you mind guiding us through this, please? Is it the people or the institutions that are at fault? What are the most popular marketplaces? This led many to focus on government agencies and their associated organizations, including central banks. That has been the case since 2022, as I indicated earlier. Indeed, its dimensions have quadrupled. While doing so, it has successfully decreased jewelry demand over the past several years. The demand for jewelry was one of the 3 lowest it has ever been last year. Oddly enough, there is anecdotal evidence that the demand for jewelry, along with real investment commodities like coins and bars, is on the rise again. Today, word got out that a Japanese refinery has halted sales of small gold bars, the kind that ordinary investors would purchase, because they can't process the metal anymore. The outcome is that demand is coming from everywhere. The idea that financial institutions like banks and hedge funds may be less forceful than they were in the past is fascinating. This is shown by the futures posture, which is not as strong as one would expect, the options measure, and the comparatively mild risk reversal. Weakness in the risk reversal is surprising considering the heavy involvement of financial firms. Got it. On top of that, gold prices often move back up after a stock market crash. The robust performance of the S&P 500, the soundness of the bond markets, and the absence of crisis symptoms in the dollar, all evidence that this is not the situation right now. Could you please explain your reasoning behind this? That is a very good question. You have my full support. I wish I could be more specific about why this is happening, but all I can say is that it is changing people's minds about buying gold as an investment. Several instances of a positive association or correlation between risk assets and gold occurred between 2006 and 2013. Additionally, that has been accurate since 2020. When risk assets depreciate, investors may seek liquidity or the opportunity to make income from their portfolio's performing assets as a possible explanation. That is true in certain asset markets and during stock market slumps. Gold fits the bill. As a result, selling gold can sometimes boost liquidity. Apart from that, though, I do believe that the correlation between gold and risk assets has been strengthening recently. Consequently, the case for gold as a portfolio hedge may be weakening. Also, it might make gold look more important, which is a good thing because gold is more likely to add to portfolio gains than to protect them from losses. The price of gold might reach $10,000 per ounce by the end of the decade, according to some analysts. I know these are more akin to questions to a crystal ball, but what do you think about the forecast of a sharp rise in the price of gold? Since these analysts are clearly planning far into the future, I think it has a better chance of coming to fruition. Having said that, my words would not be able to refute such views. That theory is in line with the U.S. Federal Reserve's current plans to cut interest rates next year. The vast majority of investors probably already have it planned. On the other hand, their predictions indicate that core inflation has not yet fallen to target. It brings to mind an era when gold's performance blew away expectations set by its financial model or fair value. Therefore, there was a period in 2006 when oil prices surged. At the same time, the Federal Reserve hinted at a strategy to deal with the near-term effects of rising oil prices. So, it's not completely unlike when gold was the currency of choice. Before really considering the feasibility of higher targets like 10,000, it is crucial to evaluate how long core inflation remains above target and whether monetary authorities are still prepared to tolerate inflation overshoots in the coming years. We are also in an unprecedented geopolitical climate. On top of that, gold has always stood for strength and stability. Do you think that is more important right now, considering the apparent global instability? The major reasons that contribute to the direct benefit of gold are the position of great power competition and the worry of some nations that their assets denominated in US dollars or euros could be frozen in the case of future conflicts. The influence of geopolitics on the gold price is evident in that instance. Contrarily, I think conflicts and crises will continue, which bodes well for the value of gold. Regarding it from that angle, though, I'd say it's more of a temporary factor that disappears after about 4, 5, or 6 weeks. Accordingly, I think the first factor will have a greater impact over time. For some reason, I didn't see it as merely gold. This is in addition to the success of other precious metals, such as palladium, silver, and platinum. What does that mean to you? Of course not. Geopolitical conflict and, dare I say it, rivalry are broader themes to which that is related or contributes, in my view. Furthermore, this is connected to the pandemic as it pertains to the supply chain's resilience. Governments are attempting to strengthen their country's supply chains through the use of friendshore options, whether this is intentional or not. Thus, the current situation involving China's oil reserves is causing oil markets to be more constrained than they otherwise would be. The U.S. Department of Commerce is also reviewing Section 2-2 investigations into significant minerals, which including white precious metals. So, it's clear that both governments and businesses are attempting to strengthen their supply chains in order to prevent any potential disruptions. This tendency could be characterized as a form of resource nationalism. I believe it would be sufficient if we just left it at that. Michael Shui of Deutsche Bank in Singapore, I appreciate you taking the time out of your day to meet with me today. Yours faithfully. The software TurboScribe.ai was used to transcribe this. Take this message out of your inbox by signing up for Unlimited.